Kuzampo, welcome to Bhutan e-learning program. My subject is Accountancy and key stage is 5, which is for classes 11 and 12. In this lesson, I will be talking about accounting for property, plant and equipment. In short, we call this property, plant and equipment as PP&E. It is the acronym for property, plant and equipment. Here onwards, I may use that word PP&E quite often. So please don't get confused what PPE and EE means. It simply means it is property, plant and equipment. So here you can see images of some property, plant and equipment which is owned by some companies here in Bhutan. Later on we will see in detail what are those and what is the functions of all these property, plant and equipments in that respective companies. So let us see the objectives of this lesson. So objectives number 1 is definition of property, plant and equipment. So how can we define property, plant and equipment? That is the first objective. Second one is recognition criteria for property, plant and equipment. When can we recognize whether an item is property, plant or equipment? And third one is measurement of property, plant and equipment. Here measurement means when can we record an item of property, plant and equipment in books of account. So before going into the actual property, plant and equipment, let us try to recap what you have already learned in previous lesson. So the question that I would like to ask you all is, what is an asset? Excellent. An asset is a resources controlled by the entity as a result of past event and from which future economic benefits are expected to flow to the entity. So here you might be wondering why I am talking about assets out here. But let me tell you all that there is a direct relationship between assets and property, plant and equipment. And the relationship between assets and property, plant and equipment is that you might have learned last time that assets are classified into two broad categories. First one is current assets and second one is non-current assets. Property, plant and equipment is non-current assets. So before knowing the definition, recognition criteria and measurement of property, plant and equipment, we also have to know this definition of assets, which is assets are the resources controlled by entity because of past event and which will have future economic benefits to the company. So now let us see the purpose of accounting for property, plant and equipment. What is the reason for the company to account property, plant and equipment? The first reason is there is no organization functioning without physical resources such as property, plant and equipment. So it simply means that there isn't any business entity which do not have property, plant and equipment. Be it a small scale or be it a large scale, all the organizations will have property, plant and equipment in their financial statement. The second reason is that in companies like DGPC, PPE makes up almost 79% of the total assets. If you happen to look into their statement of financial position, you will see 79% of total assets is property, plant and equipment. Then next one is incorrect accounting and reporting of PPE will not only mislead the information users, but it will also affect the operations of the business and investment and financing activities. Next one is property, plant and equipment as an asset will generate cash flow and income to the entity. Now let us see the definitions of property, plant and equipment. So here Bhutan Accounting Standard 16 defines property, plant and equipment as a tangible items. Please remember that word tangible items. We will not include any intangible items. So PPE needs to be a tangible items which are held for use, which are held for the purpose of production. Maybe in factories with the help of machines they will produce goods, or it could be for supply of goods or services. Maybe the company will use buildings. If they have any retail outlet to sell goods, they might use building, or they might use their delivery vehicles for the delivery of goods, or it is also used for rental to others. When you say rental to others, please be mindful that except land and building, all other property, plant and equipment are used for rental. And when you happen to see a company have listed their land and building for rental purpose, that land and building should not be treated as an item of property, plant and equipment. Instead, it should be treated as investment property. And the last one is if it is held for the purpose of administrative, which means that where that property, plant and equipment are used solely in their official office purposes. The second part of the definition means that it is expected to be used during more than one accounting period. It means that the useful life of property, plant and equipment should be more than 1 year. Now, let us try to categorize the property, plant and equipment. So, under property we have an aeroplane, a coaster bus and a building out here. So, these are some examples of property, and let us see what is the use of this property out here. The aeroplane and coaster bus is mainly used for supplying of goods and services. They provide services too, and this building out here is mainly used for administrative purposes. We have plant, which includes a factory, and everyone knows that what we do in factory, it helps in producing of goods. And we also have some equipment. Here you can see we have office equipment and a desktop, and the purpose of having this office equipment and desktop is for administrative purposes. Here I might have categorized this as supply of goods into different categories, but it depends from company to company. They might take that office equipment or computer for rental to others also. It depends from company to company. Now, let us see the recognition criteria of PPE. When can we recognize an item as a property, plant and equipment? So, first, recognize simply means that when can we record that in our books of accounts. So, first recognition criteria is that it is probable that the future economic benefits associated with the item will flow to the entity. Here, what does that? This statement means that the item of PPE will brings in income to the company. Now, when you say future economic benefits, we have two kinds of future economic benefits, which is direct and indirect. Now, number 2 recognition criteria is the cost of the item can be measured reliably. The cost out here is the actual amount of money that the company have paid for purchasing that asset or for construction of that assets. And the cost of item should need to be measured reliably means that the cost of the item should be in monetary terms. Now, cost again, it is into two categories. First one is initial cost, we also call this as historical cost, and second one is subsequent cost. Now, let us see the measurement of property, plant and equipment. Under measurement, first one, it says that all the items of property, plant and equipment should be initially measured at cost. Now, let us see what exactly is this cost. The cost of an item of property, plant and equipment comprises of the cost of purchase, the purchase price that the company will pay to its supplier. The cost will also include any import duties which is to be paid to the custom officials, and also it will include any sales tax after deducting net of any trade discount. Means if the supplier provides any discount to the company, then we have to deduct that discount. Number 2, it also includes any cost directly attributable to bringing the assets to the location and condition necessary for it to be capable of operating. Here it also includes transportation charges. Transportation charges out here means that when the company brings the item of PPE from the supplier to their location, the transportation cost should also need to be included to the cost of property, plant and equipment. Third one is finance costs such as interest on construction loans, and fourth one is estimated removal cost. Let us see furthermore into measurements of PPE. Now, let us see what do we actually mean by directly attributable cost. Directly attributable cost includes employee benefits payable to staffs for installing here the machines when they bring from the supplier, it will be in many different parts. The staff or the workers will install and bring it together, or we may call it as assemble it together, or constructing out here means constructing of buildings or initial testing the assets. So, all those benefits paid to this employee for the respective jobs should also need to be added to the cost of the item. Second one is site preparation. Site preparation means out here means if the company wants to construct a building on a particular land, before constructing building they have to clear all the land, they have to make the land in a flat position so that they will be able to construct the building. So, that is what you mean by site preparation. Then we have professional fees directly associated with the construction, such as architect or consultant fees. If the company is going to construct a building, the company needs to have a design of that building, and a design will be made by an architect. So, the fees which the company pays to the architect, that fees should also need to be included with the cost of PPE. Then any other costs directly attributable associated with assembly cost. So, these direct costs are capitalized, means that the following costs should be added with the cost of the assets. If the entity has borrowed funds specifically or mainly to finance the construction of an asset, then the amount to be capitalized is the actual finance cost, which is the interest incurred. In Bhutan accounting standard, that part of interest will be called as borrowing cost. Now, these are some of the sources from where a company will borrow fund for the construction or acquisition of property, plant and equipment. Let us see one example of borrowing cost. Let me go through this question out here. An entity takes a construction loan of 1 million from a commercial bank for 3 years and pays a total interest of 300,000. Please remember that here the construction loan is of 1 million and it is taken for 3 years, and after 3 years the company paid total interest of 300,000. But the construction lasted for 1 year, which means that construction has been completed within a year. Now, your question is what amount of interest that can be capitalized. So, let us go back to the question once again. The company has acquired a loan of 1 million for 3 years, but the construction have completed within a year itself, which means that the actual construction period is only 1 year, but the company have paid interest for 3 years. So, here when you talk about borrowing costs should be only till the construction ends. So, construction is going to end within is completed within a year. So, let us now we have to find out the actual borrowing costs from the total interest that we paid. So, how to get that is 300,000 is for 3 years, but our construction is only for 1 year. So, in order to get the amount is 300,000 divided by 3, we will get 100,000. That means, for each year the interest amount is 100,000. So, 100,000 only needs to be capitalized, which means it should be added to the cost of the property, plant and equipment, whereas rest balance of 200,000 should be treated as any other expenses. Now, let us see the journal entry for this treatment of this borrowing cost. So, first you can see property, plant and building, property, plant and equipment, which is building, debited with 100,000. Then we have got finance cost, which is an expenses of 200,000 debited to cash or accounts payable of 300,000. Now, let us see some more in depth of this property, plant and equipment. Let us see about land and building. Land and buildings are separable assets and are accounted separately even when they are acquired together. If a company purchases both land and building together, they cannot club this together and have a single account. They have to maintain separate account for both land as well as building. What is the reason of having separate account for land and building is because land has an unlimited useful life and therefore it is not depreciated, whereas building has a limited useful life, therefore are depreciable assets. Now let us see the acquisition cost of lands. Acquisition cost means what costs are included in the purchase of that land. So number one is purchase price, then we have charges such as land surveys, land fees, title fees or transfer tax. Then we also have demolition cost of old structures that must be turned down to get the land for intended use. When the company acquiring or purchasing a land, if on that land already there was an old structure, now to demolish that structure they might incur some expenses. That expenses should also need to be added with the cost of that particular land. Now let us see the journal entries. So your journal entry is property, plant and equipment. If you are acquiring land, debit, property, plant and equipment, building, debit, plant and machinery, debit, motor vehicles, debit, furniture, debits, computer equipment, debits. Likewise, if the company acquires any property, plant and equipment, all should need to be debited like this, and on the credit side it should need to be either to cash account if you are purchasing through cash, to bank account if it is on through check or through any online banking transactions, or if it is on credit it should be to accounts payable. So this is the journal entry for purchase or acquisition of property, plant and equipment. Let us see one example of calculation of acquisition cost or property, plant and equipment. A construction company purchased an excavating machine and incurred the following expenses. So here company is purchasing excavating machine. Let us see what are the following expenses. Invoice price or the purchase price is nil term 1 million, transportation costs paid by the company is 12,000, installation cost for installing that machine is nil term 9,000, repair costs prior to use is nil term 35,000, import duties paid by the company is 15,000, and the vendor have offered 5% trade discount on the invoice price. That means the supplier have provided some discount which is 5% on the invoice price. Remember we have invoice price on the top, and the company have also paid 10% sales tax. Let us see what this question asks us to do. Calculate the cost of acquisition of the item of property, plant and equipment which must be recognized in the company's accounting system. That means in this question we have to find out the acquisition cost. Remember acquisition cost or the cost includes all directly attributable costs, transportation cost, installation cost, all this should need to be included, and the only thing which needs to be subtracted out here is the discount provided by the suppliers. Now let us see the solution part. First we will have invoice price of nil term 1 million, then we have to subtract the trade discount provided by the trader which is 5% on invoice price. So 5% on invoice price is 50,000. After subtracting 50,000 from 1 million we have got net or total invoice price of nil term 950,000. On that 950,000 the company have paid 10% of sales tax which is 95,000, transportation costs of 12,000, import duties of 15,000, repair cost prior to use of 35,000, installation costs 9,000. Now the total cost of that particular excavating machine amounts to 1,116,000. Hope you are able to get how we got this. Apart from discount, all other costs should need to be added. Only discount is subtracted. Now if we pass journal entry for this treatment, it will be property, plant and equipment which is we have purchased excavating machine debited to either cash or through bank or through accounts payable. I have got two activities for you. The first activity is this one. I will give you a few minutes to note down. Let me go through this question. Karma Steel Private Limited is installing a new machinery at its production facility in Pasaka, Chuka. It has incurred this cost. So cost of machinery is 2.5 million. Initial delivery and handling cost is 200,000. Cost of site preparation is 600,000. Consultants used for advice on acquisition of plant null term 700,000. Estimated dismantling cost after 7 years of use is null term 300,000. Now the question is, calculate the cost of acquisition of the item of property, plant and equipment which must be recognized in company's accounting system. So your work out here is, from the following list of costs, you are supposed to find out total acquisition cost of installing a new machinery out here. Now my second question is, look around your place and identify different items of property, plant and equipment. So you may look inside your house also, you may look just by your house, and please try to identify different items of property, plant and equipment, and make sure that you follow the definition, recognition criteria and measurement of property, plant and equipment. So thank you students. I will see you all in the next lessons.